From the dawn of time, men have wondered. I don't know, I was just thinking of like movie trailers we could do for this. Long-term versus short-term, my name is Rob Booker. These are your FX Trading 101 videos. I love the heck out of you. Thanks for being here. When it comes to trading a discretionary trading account, which means you're making the trading decisions, you're pushing the buttons, you're not making a robot do it, you're making yourself do it. People have these arguments about long-term versus short-term trading. Long-term versus short-term trading generally means either you are trading often and day trading, or you're not trading very often. So I'm gonna write some terms out that define long-term and short-term trading. So short-term trading is generally referred to as, or includes, day trading. Long-term trading is not day trading, and it's generally referred to as, and I know this might be a new term for some, position trading. Sometimes people will also throw around, that doesn't make any sense, throw around the term swing trading. Day trades last about 10 minutes to 1 day. Position trades can last days or weeks. That's long term. Short term is a day, or two maybe. That's short term. Long-term trading is generally referred to as using higher time frame charts. An example of a higher time frame chart might be the weekly chart, where every candle equals 1 week, and it takes weeks for a trade to set up and weeks or months for a trade to complete. Or a daily chart, where each candle takes 24 hours to complete. Usually the candles will close at midnight London time. And it might take days or weeks for a trade to set up, and it might take days or weeks for a trade to complete. Patient, careful, slow-moving. A 4-hour chart might be a medium-term chart, where it might take hours or days for a trade to set up, and it may take hours or days for a trade to complete. Or a 1-hour chart. We had a bunch of trades. We had a 1-hour chart trade, which would generally be referred to as the exact middle between short-term and long-term trading. Some long-term traders would refer to the 1-hour chart as short-term, but don't get wrapped up in all those arguments. A 1-hour chart's going to set up trades, generally speaking, that take an hour or a day to set up, meaning you could get maybe a new trade every day or two, and might take an hour or 2 or 3 or 4 or a day or 2 or maybe even a week to complete once open. Everything below the 1-hour chart, the 30-minute chart, the 15-minute chart, the 5-minute chart, or the 1-minute chart are generally referred to as shorter-term charts. So if we go back over here, short-term traders, these are like minute charts. So I'm going to refer to those as minute charts, meaning 1 minute, 5 minute, 15 minute, 30-minute charts, where on a 1-minute chart you might get 10 trades every day and you're just pushing the button, or you might get 50 trades in a day from the 1-minute charts, and it only takes minutes for the trade to set up and minutes for the trade to complete. Now, of course, you have to have a trading system and reasons to get in and get out. But generally, these are the main, so far, differences between long-term and short-term trading. Most people believe that short-term trading is more difficult. Nate, do you have any ideas why people might think that short-term trading or believe that short-term trading is more difficult?
You got to be there and know what you're doing right when it happens.
You got to be there and know what you're doing right when it happens. It can be stressful. You can take a lot of trades and be under a lot of stress. You can have, you could sit down in front of the charts for 4 days in a row and nothing happens or not enough happens, and that can be very stressful. So I would call it difficult and or stressful. And then long-term trading is generally referred to, I know this may not be true for everyone, it's typically referred to as easy or easier. And what's another way to describe, it's sort of lazily moving along, it's relaxed. That's the word I was looking for. Thank you, Nate. relaxed approach to trading. Is that true? Not necessarily, but I'm just giving you the lowdown on what people view as the truth. One of the most famous books ever written about trading is Trading for a Living by Alexander Elder. Most people don't know this, but Gandalf the Wizard actually wrote the foreword for that book. That's not actually true at all. And in that book, he talks about how it's basically only viable to trade long term. And that's an argument that he made back in the 90s. And a lot of people have read that book. Hundreds of thousands of people have read that book. And that sort of trope got put into the general consciousness of traders. It may or may not actually be true, but you're going to hear it a lot. Short-term trading has generally been viewed as more difficult and as more stressful. And there aren't a lot of verifiably profitable day traders. In fact, I've maybe met in my lifetime, and I'm only 27, which is not actually true. In my lifetime, I've really only met one or two people who are a day trader, who trade every day short term, who are making a living. It is incredibly, in my experience, incredibly difficult. It's fun, and it's a nice addition, maybe one day a week to what you're doing. But to do it every single day, I've met very few people that can survive that sort of stress long term and trade for a living. Short-term trading, it's stuff you're getting in and out of trades every day. You're using the minute charts, 1 minute, 5 minute, 15 minute. It's generally viewed as more difficult. I don't actually know if that's really true or if we've all just sort of believed it because that's what we've been told. Long-term trading is generally position trading. That's what it's referred to as position trading or swing trading. Trades that last days or weeks or even months using higher time frame charts. And it's generally viewed as an easier or more relaxed version of trading. Now there's one more thing I want to say about long-term and short-term trading that most people do hear about one time or another. Sometimes people will combine these two things. What some people will do as a trader is they will look at the long-term charts and then they will place trades on short-term charts. Alexander Elder called this the triple screen approach, where he used 3 time frame charts to help him set up a trade. Frankly, I don't know if that's better or worse, but let me show you what that might mean. If we look at a weekly chart of, say, I don't know, let's just look at this is probably not a great idea to look at the weekly chart of that. If we look at a weekly chart of the British pound Canadian, and let's just scroll back because we can. Let's say you're looking at a weekly chart, Nate, and from left to right on that chart, is it going up or down?
Generally up.
Generally up. So we might look at a longer term chart and say, oh, on a weekly or a daily, this is a 1 hour chart, but let's pretend it's a weekly. We might say, oh, wow, on a long term chart, it's generally moving up. Okay, so it's moving up. Generally speaking, it's moving up. And then we might go to the 30 minute, 1 hour, 15 minute, or something else. We might go to those time frame charts and say, oh, you know what we're going to do? Now that we're on the shorter time frame charts, which way is it moving?
Typically down.
It's moving down. So we might say, oh man, the long-term trend is up, but the short-term trend is moving down. And then we might set up a trade to buy it on this dip. So that's one perspective that you might see thrown around. That's not a trading system right there, although it's the beginning pieces of a trading system. And you're going to see a lot of that talked about as you see people talk about trading. I'm not going to give you a strong opinion right now whether I think you should be a day trader or a long-term trader. But I'm going to give you at least the following advice that I think will serve you really well. I think you should make the decision for yourself whether long-term or short-term trading is right for you. And let the money speak for itself. Don't do one of these two things because you think it's interesting. Do one or these two things because it's making you money consistently. And the best way to find that out is as you start your trading career and as you begin all of this process, jump into the long-term and the short-term charts, take a look at both, play around with them, do some trading, find out what works best for you, where you feel the most comfortable and relaxed, and then just do that. I want to thank our sponsor, Forest Park FX. Interested in FX trading? Ding! Contact Forest Park FX to open up a trading account and get cashback rebates on every trade you place. I don't know why I want to do that. Every trade you place, go to forestparkfx.com. Forex trading, unfortunately, carries a significant risk of loss. Terms and conditions will apply. I'm Rob Booker. I'll see you soon.